Welcome to our Hong Kong Brief Show. I'm your host Jenny. Today, we've got some exciting news from the financial world. Hong Kong stocks have taken a slight tumble from a 3-month high, mainly due to concerns over currency moves and rising interest rates. The HKMA stepped in by buying US dollars to support the Hong Kong dollar, which caused some property and tech stocks to drop. It's a reminder of how delicate the balance is in our local market. Next up, the HKMA made a bold move for the first time since 2023, selling over $1 billion in US currency to defend the Hong Kong dollar's peg at $7.85. This intervention aims to curb risky carry trades and tighten liquidity, affecting borrowing costs for everyone. It's a strategic effort to keep our currency stable amidst global capital flows and market enthusiasm. And for something fun, vintage jump hour watches are making a stylish comeback. These unique timepieces, with their fascinating moving numerals, have been around since the 17th century but are now gaining popularity thanks to brands like Jaeger-LeCoultre. They're not just watches, they're a blend of craftsmanship and art, perfect for collectors and fashion lovers alike. Please continue to watch for more detailed insights. The South China Morning Post reports that Hong Kong stocks have experienced a decline from a 3-month high, primarily due to a recent intervention by the Hong Kong Monetary Authority, HKMA, aimed at defending the local dollar's peg to the US dollar. The HKMA sold $1.2 billion in US dollars to buy Hong Kong dollars at $7.85, the weaker end of the currency's trading band, marking its first such move since 2023. This intervention was intended to curb arbitrage activities like carry trades that exploit interest rate differentials, but it also raised concerns about tightening liquidity, which could lead to higher short-term interest rates and increased borrowing costs for property and corporate financing. Major local stocks, including property developers and tech giants like Alibaba and Tencent, saw declines, with some new companies debuting in Hong Kong experiencing notable gains, such as St. Bella and Zhou Lufu Jewelry. Meanwhile, regional markets showed mixed performances, with Japan's Nikkei rising and South Korea's Kospi falling, reflecting broader regional sentiment amid these financial maneuvers. The same publication details how the HKMA's currency market intervention seeks to stabilize the Hong Kong dollar amid rising carry trade activity fueled by interest rate differentials between Hong Kong and the US. The HKMA's move to sell US dollars and buy Hong Kong dollars was driven by the dollar hitting the $7.85 weak end of its trading band, a level maintained since 1983. This action aims to prevent the local currency from weakening further and to curb speculative arbitrage, but it also tightens liquidity in the banking system, potentially pushing up short-term interbank rates like HIBOR. Such rate increases could significantly impact mortgage repayments and corporate loans, especially if carry trades persist. Historically, these interventions have been frequent, with the HKMA spending billions to support the currency during periods of capital inflows and speculative activity, illustrating the delicate balancing act of maintaining Hong Kong's currency stability while managing liquidity and interest rates in an increasingly volatile environment. South China Morning Post highlights the resurgence of jump hour watches, a vintage yet innovative style that captivates collectors and enthusiasts alike. These timepieces, which display hours through a small window with numerals that jump forward, have roots tracing back to the 17th century, with notable developments by Joseph Paul Weber in 1883 and subsequent revivals by brands like IWC and Cartier. Today, modern watchmakers such as Jaeger-LeCoultre, Urwerk, Louis Vuitton, and de Bethune are embracing this nostalgic yet dynamic mechanism, blending exquisite craftsmanship with contemporary design. Limited editions featuring precious stones, vintage aesthetics, and cosmic motifs have gained rapid popularity, with collectors like Ruud van Rijn emphasizing the mechanical allure and the engaging spectacle of the hour jump. These watches are more than mere tools for telling time, they are interactive pieces of art that spark curiosity, conversations, and admiration, transforming the wrist into a stage for miniature performances of engineering mastery. Richard Lee's FWD Group has re-entered the Hong Kong IPO scene with a significant move, aiming to raise nearly $500 million amid a busy market filled with large deals. The insurer, founded in 2013 and operating across 10 Asian markets, plans to sell over 91 million shares at 38 Hong Kong dollars each, valuing the company at 48.3 billion Hong Kong dollars. Major investors like Mubadala Capital, Swiss Re, and GIC have committed substantial sums, with Lee maintaining a controlling stake of approximately 66.45%. The funds raised are intended to strengthen FWD's financial position, support growth initiatives, and expand its digital capabilities, reflecting the ongoing confidence in the Asian insurance sector despite the competitive landscape. The IPO's timing and scale underscore the vibrancy of Hong Kong's capital markets, especially as they attract prominent global and regional investors eager to capitalize on the region's economic momentum. As summer reaches its peak, South China Morning Post introduces 5 new coffee spots across Hong Kong, perfect for caffeine enthusiasts seeking refreshment and community. From the bespoke, mood-based brews at No Title in Central to the quick, casual offerings at Doppio in Siang Pun, each cafe offers a unique experience. Dozy's pet-friendly terrace in To Kwa Wan provides a spacious retreat, while a cafe in Yuen Long offers a cozy neighborhood vibe inspired by scenic Mount Aki. The latest NOC Coffee Co. branch at City Plaza introduces a sophisticated night menu featuring coffee-infused cocktails, catering to those who want to unwind after hours. These new venues not only serve expertly brewed coffee but also foster social connections and local culture, making them ideal summer havens for residents and visitors alike. The South China Morning Post vividly portrays Hong Kong's ongoing struggle with the aftermath of the national security law, 5 years after its implementation. The story follows Katrina Chan Kim Kam, a former district councillor and theater personality, who exemplifies the chilling effects of the law on society. Despite not being charged, her career and personal life have been profoundly impacted, her work dismissed, her reputation tarnished, and her future uncertain, highlighting how social and professional ostracism has become a new form of punishment. The law's broad reach, coupled with a climate of fear and self-censorship, has led to a significant decline in free speech and civil society activity, with many fearing the boundaries of permissible expression are shrinking. As officials emphasize that the law targets only a small minority, the narrative underscores the persistent tension between maintaining order and safeguarding individual freedoms, with the judiciary grappling to interpret and apply the law within Hong Kong's common law framework amid international criticism and internal caution. Meanwhile, the South China Morning Post also explores the complex legal landscape shaped by the law's 5-year mark, including the rise of sedition charges and the challenges faced by the judiciary. Cases like the trial of Jimmy Lai, a media tycoon accused of colluding with foreign forces, symbolize the law's high-profile enforcement and the contentious debate over free speech. The article details the legal intricacies, such as the presumption against bail in national security cases and the difficulty of applying mainland legislation within Hong Kong's legal system. Despite these challenges, officials claim that the law has restored stability and prevented chaos, with conviction rates remaining high and the courts issuing detailed judgments that clarify the scope of sedition and other offenses. Yet, the narrative warns of a fragile balance, as authorities remain vigilant against soft resistance, subtle forms of dissent, and the potential erosion of Hong Kong's once vibrant civil liberties, emphasizing that the next phase involves refining legal interpretations and engaging the public to understand their rights. In stark contrast, the South China Morning Post reports on the booming luxury property markets of Dubai and Abu Dhabi, where Chinese investors are increasingly making their mark. Dubai, with its established reputation as a global investment hub, continues to attract high-net-worth individuals seeking space, privacy, and a luxurious lifestyle, with sales of ultra-high-end homes soaring, particularly those over $10 million. Abu Dhabi, still emerging as a major player, is rapidly gaining ground thanks to its attractive value propositions, with rising interest from Chinese buyers and a growing number of luxury developments. The report highlights how geopolitical tensions in the Middle East have not dampened investor confidence, as the UAE remains a safe haven for regional and international capital. With Abu Dhabi's real estate market experiencing rapid growth and offering promising yields, the story underscores the UAE's strategic positioning as a competitive and resilient destination for luxury property investment, even amid global uncertainties. The South China Morning Post vividly captures the recent seismic upheavals in Japan, where a swarm of over 330 earthquakes around the Tokara Islands and the awakening of Mount Shinmo have stirred public fears, fueled by a manga artist's ominous prophecy. Despite seismologists dismissing any scientific basis for predicting earthquakes' precise timing or magnitude, the coinciding eruption and tremors, along with the artist's forecast of a catastrophic event in early July, echoing her previous prediction of the 2011 Tohoku disaster, have heightened anxiety. This surge of worry is compounded by predictions from feng shui master Qi Xianyu, warning of natural disasters in the year of the wood snake, which has impacted travel plans and heightened regional unease. Experts emphasize that such seismic activity, including the recent swarms and the eruption, are not unusual and cannot be reliably linked to prophetic forecasts, yet online commentary reveals a persistent belief in the uncanny accuracy of past predictions, illustrating the deep tension between scientific understanding and cultural fears amid Japan's seismic history. The South China Morning Post also offers an intimate portrait of a French entrepreneur who finds joy and grounding in family life amidst the chaos. Living in Clearwater Bay, she starts her mornings with invigorating runs in nature, relishing the therapeutic power of the outdoors. Her home is filled with practical objects like black-on-the-list bags, which serve multiple purposes, from carrying wine to collecting corks from wine bottles, symbolizing her appreciation for simple pleasures. Her passions extend to savoring scents like freshly cut grass, reminiscing about competitive golf in her youth, and indulging in culinary delights in Paris and Mexico City, where she grew up. Her values emphasize time as the ultimate luxury, prioritizing family, meaningful experiences, and social contributions, such as volunteering for a charity in Mexico. She treasures moments of surprise, like her husband's birthday surprise, and finds inspiration in art and nature, advocating for sustainability and kindness. Her reflections reveal a life rooted in joy, connection, and purpose, emphasizing that true wealth lies in shared moments and the pursuit of a balanced, meaningful existence. The Sydney Morning Herald reports that U.S. markets remain near record highs, with the S&P 500 and Nasdaq showing resilience amid ongoing geopolitical tensions. Oil prices stabilized after a sharp decline, with crude rebounding slightly, reflecting cautious optimism about the Israel-Iran ceasefire holding. Meanwhile, the Australian market is poised for a modest dip, and the Australian dollar has gained strength, indicating a cautious but steady global economic outlook. In corporate news, BP's shares surged on rumors of a merger with Shell, though Shell denied negotiations, illustrating the volatile nature of market speculation. Cryptocurrency stocks like Coinbase and Robinhood gained as Bitcoin soared past $107,000, while companies like QuantumScape announced breakthroughs in battery technology, offsetting losses from FedEx and General Mills, which reported mixed earnings and cautious outlooks. The bond market remained steady, with Federal Reserve Chair Jerome Powell emphasizing patience before adjusting interest rates, awaiting clarity on tariffs and inflation impacts, highlighting ongoing uncertainty in U.S. monetary policy. Nikkei Asia details the successful Hong Kong debut of Chinese ride-hailing giant Chow Chow, a division of Geely, raising $236 million to expand its services and develop autonomous driving technology. Despite listing at a 19% discount, Chow Chow's market cap reached approximately $2.42 billion, holding a 5.4% share of China's ride-hailing market, second to Didi. The company's strategy involves deploying Geely's new energy vehicles and training drivers, aiming to challenge Didi's dominance. Concurrently, the South China Morning Post reports mounting concerns within China's EV industry over aggressive price cuts, particularly by BYD, which has sparked a price war that threatens smaller rivals and industry stability. CATL's senior executive warned that without regulatory intervention, the ongoing discounting could cripple many EV manufacturers, with only a few, including BYD and Tesla-backed Li Auto, remaining profitable. Industry leaders like Li Shufu of Geely expressed caution, emphasizing technological innovation over price competition, as China's EV sector faces pressures from overcapacity and unprofitable firms, with government efforts to curb destructive pricing strategies. The South China Morning Post vividly illustrates the emergence of three haunting specters in the realm of global finance: fledgling AI models, shadow banking, and cryptocurrencies, each posing dispersed yet formidable threats that threaten to precipitate another systemic crisis. AI, with its opaque algorithms and collusion effects, could trigger rapid, uncontrollable errors reminiscent of the 2008 Lehman collapse, especially as developers admit they don't fully understand how their black box systems operate. Shadow banking, now managing nearly half of global assets with complex, opaque, and highly leveraged operations, amplifies systemic risks, particularly during market turbulence, as lax regulations and off-balance sheet activities hide aggressive investments. Meanwhile, the unregulated and fragmented cryptocurrency ecosystem, valued over $2 trillion, introduces vulnerabilities through market volatility, cyber thefts, and questionable collateral, threatening to cascade failures across payment networks and financial portfolios. Despite some regulatory progress, the lack of global cooperation, transparency, and real-time data sharing hampers effective oversight, risking a future where these dispersed threats could converge into a perfect storm, unless urgent, coordinated action is taken to build resilient safeguards and foster international collaboration before it's too late. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Turn on the TV screen, see the world unseen. China's on the news tonight, history in the spotlight. Scroll through my phone again, find out where to begin. Stories from the east to west, learning from the very best. News in China every day, learning in a fun new way. From the cities to the farms, feel the heartbeat, feel the charm. beginning to the end, connecting hearts through every word. China story